Welcome back. You're tuned into Power Breakfast on CNBC-TV18. Well, we did speak about the global markets, but let's get in Anisha, who is joining us to get us all the market cues we need to watch out for trade today. Hi, Anisha. Good morning.
Hi, Sonal. Very good morning. Well, as you have been talking about, the big headline overnight was the fact of what's happening in the market of crude. Remember, the Texas Intermediate crude for May delivery actually fell more than 100% and entered into the negative territory for the first time. In fact, by the time they ended, the May contract ended at a negative of $37 per barrel. Of course, now sanctity has come back and now WTI has moved back into the green, but it was the demand collapse as well as the storage space scarcity that really, provided that fear to the market, and that's why crude was under pressure. That's the reason the U.S. markets also ended in the red. Dow was down about 600 points, the S&P down almost 2%, and the Nasdaq also down about 1% in trade. There, of course, the investors are tracking what's happening with respect to COVID-19 spread as well as earnings, but the stimulus package is also something that we need to have on our radar. The Dow futures have now moved back into the green, so that is something to take heart from. As far as the Asian markets are concerned, they are following the cues from the global markets because the Nikkei is down almost 1% in trade, Hang Seng is down 300-400 points, and the SG50 is suggesting that we are going to start on the back foot closer to the 90-200 mark. Remember, in India, the focus is on the earnings as well as the relaxation of lockdown that happened overnight. The COVID-19 spread is also something that we're keeping an eye out on. Now, remember, this comes at the time when yesterday was a very volatile session. The Nifty fails to hold on to the 9,300 mark. The Sensex closed 60 points higher, but it was the Nifty Bank that was underperforming, down about 160 points in trade. The FIIs continue to sell. Yesterday sold 266 crores, which is a lot less than the 2,000 crore average we have been seeing over the last couple of days. The DIIs also sold. They sold around 788 crores. Quickly to tell you a couple of support levels, Sonal, 9,300, 9,400 on the upside, and a support on 9,100 are the key levels to track. Back to you.
Okay, Anisha, thanks a lot for that. But the other big talking point will be Infosys. Infosys missed the mark on most fronts in Q4, and the management also refrained from giving guidance. What is the review?
Well, Sonal, actually, it's a mixed set coming in from Infosys this time. As you said, the management commentary was weak because they did not give any clear timeline with respect to recovery. Now, that is something that supported the stock prices for TCS, but here the management refrained to give that. And apart from that, they talked about margin pressure in the near term as well as cuts in the discretionary spend from clients. That does not augur well. To add to that, given the uncertainty, they have not provided the FY21 guidance for now. In terms of the Q4 numbers, it was a miss both in terms of revenue as well as margins. The dollar revenue actually declined by 1.4% this quarter, and the constant currency growth also declined by 0.8%, and that has been the lowest that we have seen in the last 4-5 quarters. The margins came in at 21.2%. That too was lower than our expectations. However, the positive was that large deal momentum has actually been maintained. So the deal came in at $1.65 billion, and that compares to 1.8 in the last quarter, which is not very bad. Even if you look at the verticals like BFSI and retail, yes, they have definitely slowed down, but it's not a crash that has happened. So the trend should come up for you on the screen. BFSI has grown by less than 6% and retail at around 4%. The brokerage commentary is also a tad bit positive because they are taking cues of recovery to happen in the second half of the year, and that's the positive. CLSA has cut the target price to 800 on account of the multiple and earnings cut. Now, Jefferies also says that the TCP deal win momentum was reasonable, and likely vendor consolidation should help the company gain market share. They've actually increased the target price now to 705. So the ADR was also very volatile, Sonal, overnight. Let's see how the stock reacts. Maybe it'll start off in the red and then move into the green territory.
Our sense, of course, is in the near term, we see impact on our business. We don't have today a clear view of when the recovery comes back. There are many different perspectives that people have. We've obviously been interacting with our clients and looking also in the main geographies that we operate in. It is also a function of how, from a medical perspective, the situation will evolve.
Okay, on that note, let's take a quick break now. Up next, we'll get your check on the cues to watch.